Good afternoon. It's Jeffrey Christian of CPM Group. It's about 1 o'clock, 1:05 here in New York on Friday afternoon, the 6th of June. This is the day of the Normandy invasion back in 1944. Not that that has anything to do with gold or silver. I want to talk about silver today. Silver is over $36. Right now, the price of silver for the July COMEX contract is about $36.08. It has gotten as high as $36.51 earlier this morning. It's broken above $36 yesterday. I want to talk about what's going on there, what's causing that to happen. It's going to be a little bit of a longish presentation. I'm going to talk about what's happening now. Then I'm going to do this little cautionary tale, like what happened in April of 2011, because I think it's a very important thing to bear in mind. I know there are some people who don't understand that history sometimes repeats itself, or that markets actually have certain mechanisms that repeat themselves, or that there are certain systems that if you understand them, you can actually invest more wisely and make money. But I think most of our viewers and clients don't fall into that group. But I am going to review that. Then I'll talk a little bit about what we think lies ahead for silver. And then I'll talk a little bit about gold, platinum, and palladium. As I said, the price of silver has spiked sharply higher really over the last 4 or 5 days. It had been trading around $33, $33.50, $33.75. It broke higher beginning this week, and it has moved over $36 yesterday and today. It's getting up to the levels equivalent to quarterly average prices back in 2011, 2012. There are two sets of factors that are behind this. The first thing is that you have to pay attention to the fact that on Thursday, when the silver price initially rose, that was general. It was across commodities and assets. The stock markets rose in virtually every country around the world. Bond markets also were strong. Certain commodity currencies were strong. Gold, silver, platinum, palladium, copper, and other commodities were strong. Also, though, there were some things that were very specific to silver. What we're seeing is a combination of economic factors and fundamental factors, and possibly some technical analysis in there. Got to pay attention to those things. In terms of the economic and political concerns, we're not going to avoid problems. There is a strain of thought that you'll hear that maybe we'll avoid a recession, and that maybe the economic economy, which seems to be worsening in many ways in many parts of the world, could turn itself around. We happen to think those are false hopes. We think that the economic and political problems that the world is facing will continue to plague the potential for economic well-being on the part of people, corporations, and nations for some time to come. And that is going to be there. There could be a slowdown, a inuring period where investors back off. We saw a little bit of that in early May, the first couple of weeks of May, but then financial markets said, no, it's worse. And right now they're trying to figure out where it is. We could see a little bit of calming over the course of July and August, but it looks to us as if the seasonal pattern of some stability, if not weakness, in gold and silver prices may not be in effect this year. It may be overridden by stronger political and economic concerns. I won't go through the litany there. I think we all know what they are. But there are also fundamentals to pay attention to. There is the July COMEX silver futures contract roll, which is going on in the market now. It will pick up speed over the next 3 weeks. You're seeing a lot of investor buying in ETFs. And interestingly, you're seeing investors selling coins and medallions and small bars. And that's actually caused a real issue for coin dealers. I mean, there are some coin dealers reporting that they're running low on cash because they're buying so much silver back from investors. We have other dealers that have been saying that they're seeing investors selling their silver, not only investors who bought in 2021, but some investors who had bought in 2011 and 2012 when the price was much higher again back then during the global financial crisis and the Great Recession. And some of that metal seems to be being sold. So investors in physical metal, at least in North America, appear to be taking advantage of the rising prices to cash out of silver, perhaps to move into ETFs, sort of the reverse of what we saw in the gold ETF and physical markets in the period 2022 into early 2024. So you're seeing investors buying a lot of ETFs, we're into that in a second, and you're actually seeing relatively low silver coin demand and reselling on the part of investors. So those are some of the fundamentals, and I'll run through some other fundamentals too. But here's the coin data. In May, U.S. Mint is the only national mint that publishes data on how many silver and gold and palladium coins it sold on a monthly basis. The other national mints don't provide monthly data. In May, the mint sold 775,000 ounces of silver eagles to dealers, to wholesalers. These are the sales to the authorized purchasing groups. It had spiked up. You can see that 775 is sort of in line with the 928,000 that was sold in February and the 857 that were sold in March. You can see that January typically is a very high year volume because that's the beginning of the mintage year. So, dealers will come in and buy 4-5 million ounces. This year they bought 3.6 million ounces, down from the last few years. But then in February and March, relatively lower demand, spiked higher in April. The price of gold, silver was rising, and economic and political concerns were rising as well. And then it came back off in May. Today is June 6th. Through June 5th, no one has bought any silver eagles from the U.S. Mint. So in the first 4 trading days, you haven't seen dealers needing to buy new coins from the U.S. Mint. That's because they have a flood of older coins that they're buying from investors who are selling them back into the dealer market. And that's reflected in the dealer premia that you're seeing for coins, which have come down because there's plenty of metal around. So that's coins. By the way, the premium for our 1,000-ounce bars had spiked higher, and you can see it, generally speaking, is around 1% above the spot price. It had spiked higher in December and January as there was a scrounging for silver bars in the New York market. That actually persisted into March, but it has now normalized. And you can see that that spike back then didn't actually spill over. If you go back here, it didn't spill over into the smaller, the premiums that were available or demanded for coins and investor-sized bars. You can see some of these charts are from our Precious Metals Advisory, which was released yesterday. Some of them are from our Silver Yearbook, which was released a week or so ago. Investors added 34 million ounces of silver to their ETF holdings in the first 5 months of this year. That's impressive, given that they were sellers in 22 and 23, net sellers. But what's really impressive is that 24 million of that 34 was bought in May. So they really came to life in May, buying silver ETFs. So these are investors, some of whom may have been selling their bullion and buying ETFs. Others may have been non-traditionally silver investors who are watching the silver price in April and saying, I want to have exposure to silver prices, or watching the news in April and May and saying, I want to have exposure to silver prices. And the easiest and quickest way to do that, if I don't have a futures account or I don't want to go down to a dealer, is through ETFs. So we saw strong ETF demand, even as we saw headwinds in the coin market. And the other factor that we saw were the COMEX. And I mentioned it earlier. As of yesterday, there were 588 million ounces of open interest in the July COMEX futures contract. And that's important to pay attention to. I'll get back to that history from 2011, which will tell you why that 588 million ounces of open interest in the July contract could be important. If you look at fabrication demand, and this is from our silver yearbook, which we released at the end of May, silver fabrication demand actually reached a record level in 2024. Of course, it's been a mixed picture. We've seen lower jewelry demand, lower silverware demand, lower photographic demand for what it's worth. Electronics was relatively flat, and solar panels continue to use a lot of silver, although the growth rate was down from where it was. We have it coming off a little bit this year because we are still in the group that expects to see a recession emerging. And if not a recession, definitely lower growth. We did see a contraction in U.S. GDP in the first quarter. We have seen weak and contractionary GDP figures on a quarterly basis in various European countries and in other countries in Asia and Latin America. We're in a period of weaker demand overall, which could tip into a out-and-out official recession in the second half of this year or in 2026. As I said, solar demand continues to be strong, more than 200 million ounces last year, but the growth rate was moderate. Now, we had this big surge in 2023, and I've explained that before, and we explained it in the Silver Yearbook. Part of that reflected overbuilding panels, and there were a lot of panels that were built in 2023 around the world that went unsold. So in 2024 and into 2025, you see a lot of the demand for new solar installations being met with panels that already are manufactured and are sitting in warehouses, in inventories. And that's probably going to continue this year. In addition to that, you have certain recidivist governments that are pulling back on government tax breaks and other factors that have contributed to the strong growth in solar demand. But it is continuing. It is more than 200 million ounces. It's not 800 million ounces the way some of the silver promoters had promised you it would be, but it is there. And jewelry demand, as I said, has come off, and it had spiked in 2022. It came off in 2023, a little bit more in 2024, and our expectation is a little bit weaker again in 2025. And then electronics, as I said, has been relatively flat. It's down a little bit from where it was maybe 2018, 2019, but it still is holding up at relatively high levels in excess of 220 million ounces a year. So fabrication demand is strong, it's healthy, it's not pushing the price higher necessarily, but it's definitely helping to support the price around current levels. Supply has been down for several years. It rose a little bit last year. We think it's going to rise a little bit more this year, probably to a record level, exceeding the demand, the peak supply that you saw in 2017. The growth is in both mine production And it's in secondary recovery from scrap jewelry and silverware, but also scrap electronics and scrap solar panels, which, despite what you might read on the internet, is happening and has been happening for some time. Looking at inventories, COMEX inventories are at record levels, 500 million ounces, 150 million ounces or so in registered inventories. So the New York market is well supplied. I've talked in recent weeks about how there's additional silver that is outside of the Northeast COMEX zone capture area and depositories. And this is 1,000-ounce bars. This doesn't include the 100-ounce bars, the 10-ounce bars, the medallions, and the official coins that are lying around. And it doesn't include 1,000-ounce bars that are in Miami or the Los Angeles area or Nevada, Idaho, and other places where there are depositors, Utah. So there's a lot of silver lying around. Shanghai has relatively strong silver holdings. These are holdings that are in depositories that are networked with the Shanghai Futures Exchange. There are other depositories, a lot of silver depositories throughout China, and not all of them are participating in the Shanghai Futures Exchange. And then London inventories have been, they come off over the last few years, but they're stabilizing around above 700 million ounces of silver. So a lot of good inventories lying around. Now, I want to look at and run through what happened in April and May of 2011. And it's very important because it's a lesson that silver investors and other commodity investors should have learned and ought to learn. And some of them have, probably. I've run through these charts and tables before, way too often, but I think that some people need to have it repeated over and over again. The most recent time I did it was in a February YouTube video called Silver Deja Vu. Silver prices were around $37 an ounce at the end of April. They rose sharply over the course of April 2011, 28% from $37 to virtually $50, like $49.90 some odd cents at the end of April. The last week of April, you saw this big increase in the price of silver. And of course, the promoters were out there saying, okay, once it breaks above 50, it's going to 500. You'll be able to buy a house for 3 ounces of silver. All kinds of nonsense that some people continue to believe because it fits their worldview and helps them sleep at night, right? We were saying, no, be careful here. Investors were not buying so much silver in April. I'll show you some numbers in a second. Other factors were driving the price higher. All of this led us to issue a report saying that silver was about to fall from $49 to, we thought, around $37 in early May. And we were wrong. Silver fell to $33 in 5 days. Once the roll of the COMEX May contract was behind the market. Now, if you look at the mechanics of what was going on in silver market in April, you should see that 28% increase in prices. You can see, if you skip down 2 lines, silver ETF holdings went from 601 million ounces to 603. There was 2 million ounces of silver added to 600 million ounces of inventories. So, about 3.5%. Eagle premia were very flat and actually didn't really rise. At the bottom, I've added this line. Silver Eagle sales, again, the only monthly silver coin data that you have, rose less than 2%, 1.9% from 2.77 million ounces in March to 2.82 million ounces in May. So people were not buying a lot of silver. They weren't really increasing their silver purchases. for coins. They weren't sharply increasing their silver ETF holdings. The people who were buying silver were futures market people who had a 368 million ounce short position in the May COMEX silver futures market on March 31st. At the end of March, 1 month before the first delivery date for the May contract, they had 368 million ounces of short positions on the COMEX. By the end of April, the first delivery date of April, they were down to 7.6 million ounces. They had bought back 359.9 million ounces of silver futures. Right? They had bought back 359 million ounces of silver futures. Right? That's where the buying was that drove the price from $37 to $49. By the time you got to the end of April, that stuff was the roll was largely complete. Over the next 5 days, another 4 million ounces were bought back in the May contract and rolled into July, the next active contract, which is a little precursor, foreshadowing of what I'm talking about, July. So what you saw in April of 2011, this is the open interest plunging. You can see it was falling through April, and then in the last week of April, half of it disappeared to virtually nothing. And that's when that price, if you look at this, okay, the price, the open interest is falling, and then it plunges. Now look at the price. The price is rising, and then it skyrockets. It skyrockets as the shorts are getting out of half of their open interest in the May contract. And once they're out of it, the silver price stops and falls. You don't have to believe it. You don't have to believe anything. It's a free country. Investors were not buying silver ETFs in April. They actually, like I said, added 2 million ounces, 3.5% increase in their holdings. And then when the price fell, they sold. So buy high, sell low. Hey, that's good. That's really smart. And then I added this chart. Again, this is the price with the 5-day decline in May. One of our clients, these are 3 people, all of whom were billionaires. One of our clients sold his silver position, his physical silver position, in the final week of April at prices north of $45 an ounce. He bought them back in the first day of May at $35 an ounce, around $35 an ounce. You know, he had arranged for the dealer he was selling to pick up some of the silver that wasn't in that dealer's possession already. And fortunately, they hadn't gotten around to having an armored car come and pick it up yet. So it just stayed there. We had another client who held on to his silver, but he bought puts for July. And he sold them back 5 days later at a very nice profit. And then we had a third billionaire client who held on to his silver. Say, hey, I bought this stuff at $10, $20 an ounce, and it's going to 100. I read that on the internet. It's almost like, you know, the biblical story of the 3 children with the talents that the father gives them to use as they wish. It's just the way it is. So what's next for silver? I'm breaking tradition here. This is a chart that we use in our precious metals advisory. Every month we say this is where we think a reasonable range or a probable range is for silver prices for the next month and for the next 3 months. And you can see we're looking at a base around $31. I'm sure there'll be people who say that's heretical. But we're also looking for a spike up to 37.50 or even 38.50. And if you've listened to some of the previous videos, and if you are a retail investor product client of ours, you get our silver trade recommendations, where you'll see that we're actually talking about the potential of $40 silver in June as we approach that July, and maybe even $40 again on a spike over the next couple months. It all comes down to where I started. Those two factors, those two sets of factors. The one of the factors, the July roll on COMEX, is going to disappear by early July. It could drive the price sharply higher over the next 3 weeks toward the end of June, but then it dissipates. The other set of factors, and you have to watch out for that backwash. Remember, in 2012, ETF buyers bought through the rally, a couple million ounces, and then sold it off as the price fell, contributing to the decline in price. The other set of factors, those economic and political conditions, they're likely to be with us for a long, long time, keeping investors interested in owning more silver and in more gold. Now, we have been saying, yeah, we could have a little bit of a calming period, June, July, August, before it picks up and gets worse in the final 4 months of this year into 2026. We have said that that calming period may or may not occur, depending on what happens politically. Over the last several days and then over the last couple of weeks, we have seen an increased concern on the part of people around the world about some of the political, economic, military, and financial developments that we are seeing. Some of the concerns are false. The vigilantes in the treasury market that don't actually exist, or even if they do exist, they're having no effect on treasury auctions. Some of them are quite real. I was reading last night about various Republicans in the House of Representatives who are shocked because, they had gotten this 1,036-page big, beautiful bill at 10:30 one night, and they were told they'd be voting on it first thing the next morning. So they didn't read it, and they didn't read it carefully. And quite frankly, I got it. It's a 1.6 meg document. You can get it from the Congress. You can download it and read it. It's tough because it's in this legalese that they use. But there was an article yesterday about the various factors that conservative Republicans are saying, oh my God, I would never have voted for this if I had read it, including one clause that allows the administration to ignore injunctions and court orders that they cease and desist doing several things. And another one that gives the administration increased power to delay or suspend election periods. And another section about reducing the payments for Medicaid to people who need it, and child support, and a variety of other factors. So it's not clear what's going to happen with that bill. It's now in the Senate. There's growing opposition among some senators. It may well be that they try to do their own version and then go to reconciliation, understanding that some of the House of Representative Republicans, and maybe even a few Democrats, will actually bother to read the bill and see what's in it. And unfortunately for all of us, the idea of breaking that bill into various parts and voting on each program and concept as a standalone, hey, is this a good thing or a bad thing? The possibility of that is virtually nil. So the political and economic problems that have caused investors to be buying gold and silver are going to continue for a long, long time. So what about all those other metals? Gold breaking above $33,400 as I speak to you right now. My price shots. It was about $3,340 when I started this video a half hour ago. Our expectation is that the price of gold will stay strong and move higher because those political and economic factors are, quite frankly, scary. And they're of great concern, and they're creating a tremendous amount of uncertainty and anxiety on the part of financial markets worldwide. And we're just going to have to watch and see what happens. Platinum prices have risen sharply. A couple of weeks ago, they rose to the high end of their recent trading range. They got up to 1,050, which had been sort of the peak for much of the last year or so. They broke above that, and they've gone up to around $1,104 an ounce a couple days ago, which was the peak that we saw in the second quarter of 2024. Our expectation is that that will come down, and I actually took out of this presentation a couple slides about platinum and what's going on. I think that the bullishness is predicated on three false assumptions. And hopefully, if the markets permit it, I will talk about those things and use those slides in next Tuesday's video and focus more on platinum. But I will throw this one out. July is an active month for futures delivery in the NYMEX platinum futures contract, as well as the COMEX silver. And if you look at the data as of yesterday, there were 3.6 million ounces of open interest in the July NYMEX futures contract, and there were 370,000 ounces of registered and eligible inventories. So that could keep the platinum price high and strong over the course of June. Not because of strong demand in the auto industry, not because of strong demand in the jewelry industry in China, and not because there's some massive deficits that platinum producers cannot supply enough platinum to meet fabrication demand. So I've just given you a preview of next Tuesday's theme, but because of the need to roll these things forward. So platinum prices, something to watch out for. And then palladium, July is not an active month for palladium. June is. And we've seen some decent deliveries, but it has caused the palladium price to rise some, but not so much. And palladium remains well within its recent range from the perspective of the next several months and next several quarters. Palladium, we expect it to continue in that range. I didn't really finish off with my silver, and I'll finish off now. I was showing you where we think reasonable ranges are for the next 3 months. The Precious Metals Advisory also has projections for average prices for the next 8 quarters. And we've said it in recent videos, and we've said it in the video for the Silver Yearbook launch. We expect silver prices to rise to record levels, not necessarily this year, but starting later this year, and maybe it's already started, and extending through 2026, probably into 2027. We expect quarterly and average silver prices to reach record levels far in excess to the levels that we saw in 2011. And that's predicated on a combination of fundamentals and that macroeconomic and political environment. And 2026 is going to be a by-election in the United States, if we still have elections. That's all I have for now. You can go to our website. You can read stuff. You can order and download the ebook for the Gold Yearbook in 2025. The Silver Yearbook in 2025 is out. We're working on the Platinum Group Yearbook now, and we'll release it in July. You can pre-order it. You can subscribe to the Precious Metals Advisory. You can become a retail investment client. You can send us an email at info@cpmgroup.com and say, let's talk about ways that CPM Group can help me, both with research and with consulting and advisory services. In the meantime, have a good weekend. Take care of yourself, take care of those around you, and try to do something good for the world. And as the New York Public Library sometimes says, think before you talk, read before you think. Take care of yourselves, take care of those around you. Have a good weekend. We'll talk to you next week.